All right, we are recording and let's get started. And if you have to zoom in on my screen, just zoom in. All right, so a lot of people are confused when I talk about bull gaps and bear gaps, right? A lot of people, it's probably simple to some people, but a lot of people actually don't know like about bull gaps and bear gaps. So there's a unique way that I like to trade them now. I wish I would have known this back when I first started, but I've been using them for the past month or so, and it has maybe like almost 2 months actually, and it pretty much, like tripled my account. So this is about to get into it. So the first thing is a bull gap, right? So let's say that we have price pushing up the previous day, and then we have a gap above, right? Where basically you got a gap, and you have to turn off pre-market for this. So I know some of you guys trade with pre-market on. The only way you're going to be able to trade bull and bear gaps is turning pre-market off, right? I don't use pre-market anyway, so you don't need it. All right, so we have price. So everybody see this orange line. We have price moving up, and then we have let's say the next day that the stock gaps up, okay? And we leave this gap right here, right? I'm gonna draw this line. This is our gap. So price opens above and it causes this gap. So what I mean by bull gap support is if price decides to come back in this gap, right? This is a buying opportunity. Now, the question would be like, Jay, how do I know where to buy it at? You don't really know where necessarily to buy it at, but like you know that it can potentially, it's a strong support just in that area. So that a lot of people are so stuck on support and resistance, but a lot of the times when big money decides to buy things, they don't buy it at like one particular line, right? Or one particular level. They will have an area where they like to buy the stock up, right? So they might like to buy it in this area rather than this particular level, right? So what I like to do is I like for price to, if we do gap up, right? I like for price to come back into this bull gap, and then I like to catch the basically what I call dip and rip, right? So dip and rip is literally exactly what I mean by that. Is if a stock ends up gapping up, normally this will happen on a upgrade. How many of you guys have been noticing that I've been talking about upgrades a lot more lately? Anybody been noticing that? Like lately, I've been just talking about upgrades, like, oh, this got upgraded, stuff like that. And that's what I mean. A lot of the times, this is how that happens. And they upgrade all the time. Like every day, a stock is getting upgraded or downgraded. And this can be in a bearish scenario as well. I'm gonna show that in a second. But basically, what happens is a stock will get upgraded, right? And then upgraded basically means an analyst came out and said, hey, I like Apple. I'm going to upgrade Apple to instead of, from 170, I might upgrade them to 235, right? So they're basically raising their price target for Apple, like a credible place like Goldman Sachs, JP Morgan, like those type of people, they're upgrading stocks. So a lot of the times, a lot of investors, they're like, oh man, that's actually a good thing. So the stock ended up gapping up the next day, and then basically at open you will see a sell-off, right? And normally it will sell off into that what I call bull gap support, and then it will bounce off. So this is literally my dip and rip setup. I'm going to be completely honest with you guys. It works. It is like, even it's like, out of all the strategies I've used, and I still use structure, I use everything, I just added another tool to my arsenal. This shit is profitable as hell. Like, I'm not about to sit here and lie to you. Like, I'm pretty sure y'all noticed that the signal's been getting a lot better. This shit is profitable as hell. Like, it happened. And this is one thing that's been going on for years. And that's actually how I learned about it, was learning it from the older traders that's been doing it for 20 plus years. And they've just been doing stuff like this, and you just get better over time. If you really want to be deadly with it, this is where flow comes in at, because what happens is a stock gaps up and then it comes back into this bull gap. And what do you think that I'm seeing on flow? What do you think I'm seeing on flow in this area to take calls again? What do you think I'm seeing? Anybody know? What would you want to see if a stock dip, right? You will want to see people buying calls or whatever stock that you want, that you're looking at, right? So that's literally what happened today on XPX. So let's go look at that trade real quick, right? Let's go look at XPX. Actually, let's just use SPY. SPY is better. All right, so, and I want y'all to pay attention to this real quick. I need y'all to pay attention because this is going to be a real good gem for you guys. All right, so looking at SPY, everybody sees SPY. This is the gap up that I was talking about, okay? Now, put this in your notes real quick. Whenever it comes to a bull gap or bear gap, the last low, the candle low of the gap, so like the last low, basically the lowest point is the last line of defense. So what I mean by that is if we have a gap up, and don't let this get confusing, y'all. All I'm saying is if we have a gap up, right? Price leaves a gap up, whatever is the lowest point of this candle before the gap up, I normally do, it don't really matter. You will see the low, basically the low of the candle. That's the last line of support. So let's just say a stock did something like this and then gapped up and kept going. Y'all see this right here? This is going to be your last support zone. Do that make sense? So like right here, you see this gap up. This low is the last resort. Like if it loses that low, then it's obviously invalidated. Okay. Now you will see times where it might wick below a little bit and come right back above, but overall, that's the last point. So that is exactly what I did with XPX today. That's literally how it went 400%. That's literally what happened. So we had a gap up, right? The market started pulling back. Okay. Let me get it. So we had a gap up. Y'all see this gap up, and we left this gap right here. Okay. So this is the actual gap, but remember that last low is also bullish as well. So because every day before the market opened, whenever we had that gap up, I always plot that low. So just thinking like, okay, if we do come back, if we do, you know what I'm saying, I know to buy or look to buy right there. Okay. So I personally was impatient because I was thinking that we were going to, I didn't think we were that weak to the point where we will pull all the way back to the last resort. So what I did was real transparent, and this will happen sometimes, right? I took calls in this area because I was thinking that, hey, we're not, we had a good, good earnings report and everything. I didn't think we would be that weak to the point where we come down to the last resort, right? So I jumped in around this area, and as you can see, it came down. I lost about like 30 grand on this trade. Wasn't mad about it or anything. I just knew like, okay, now since I've lost that from being impatient, now if we get to this last line of support, I know that I want to buy calls immediately. Why? Because first of all, you got that gap up. That's one sign that the Bulls are in control. Got the gap up. The Bears were able to bring it back down, but if they were really strong, they would break it down here. So as you can see, literally, if you look at the signal, I called it right at this low. Like I'm literally right at this low, maybe like a little as it started like wicking up. Because it is a 5-minute candle. I don't go under 500. I don't go under the 5-minute anymore. But as you can see, we sold off. We hit that last low, and I signal calls, right? And my stop. The cool thing about the dip and rip is your stop loss is right below. So it's like either it breaks or it don't. You know what I'm saying? So it's like you're getting all of this potential upside for a little bit of downside. Now, I don't know, like I tell you this all the time. I don't have a perfect win rate, right? I've never strived to be the perfect trader where I don't lose any trades or anything, but I will take the trades that will give me the best risk to reward. And in this way, this is the best risk to reward, right? So, so that's that trade, okay? And I'm about to show you AMD in a second. So it pretty much sold off to the last line of support, bounced clean off on the money. Great trade. Now, I will say this drop, I ain't gonna lie, this caught me off guard. I did not see that happening at all, but that's why I tried to buy calls again. I tried to buy calls again right here. Why? Was because that was that gap support that I was talking about that we bounced off from earlier. And as you can see, it didn't work out this time. The same exact trade that I took right here is the same exact trade that I tried to take right here, and it just didn't work. It's not going to work all the time. Okay. But I can guarantee you right now, when you go study tonight and practice it, I 100% guarantee you will see what I'm talking about. Like, it will literally work like 80% of the time. So let's go look at AMD. Same exact thing. All right, so this was a scenario where this was way better. This was way better. This is what I was thinking XPX was going to do. I didn't know it was going to come all the way down to the last one, but I was thinking XPX was going to do this, right? So we had a gap up on AMD. Boom, it pulled back. A lot of people was looking to shorter or whatever. And I'm like, look, we get into this support. What do I want to see at this bull gap support? If I'm looking at flow, what do I want to see in this area? I want to start seeing what? I mean, you don't really need flow because I can go put some EMAs on here as well, and that'll probably help. I'm pretty sure it's probably the golden cross right there or something. But on the flow, I literally seen that buyers were I literally start seeing AMD calls pop up, right? So that gives me more confirmation, like, hey, we're going to bounce. And that's literally, we swung AMD, boom, got that gap up, it pulled back. Then I signal AMD calls again. I think I signaled them a little early. I think I probably signaled it right here. Then it came to the gap. I was okay with that. That was fine. But overall, still great trade, same setup. So Netflix. When did I take Netflix? Hold on. Netflix was a different type of trade. Hold on. What was Netflix? Netflix had a gap down. No, I don't use, so I know a lot of people that's been with me for years. But I told you stick with me because I make a lot of adjustments throughout the year just to make me a better trader, to just stay on top of things. So the time frames that I use now is I use the 5-minute time frame, the 10-minute time frame, and then the 65-minute time frame. And then I'm come to the daily every now and then to get some levels or some key stuff. But the time frames I use is the 5-minute. I use the 5-minute for day trading. I use the 10-minute for swing trading. I use the and then the 65-minute is for like swings as well. And then the daily and the weekly are for like key levels. Because I noticed, like, I'm not really good at holding long term, and I know some people aren't like that either. I'm not really good at holding long term, so that's why I do those. Because like I can't hold long. I don't know how. Yeah, I use the 65-minute. I'm about to show y'all why I use 65-minute. Finna change the game for you guys. Okay. So why do I use a 65-minute? Well, big money likes to come in the market in around like increments, like 45-minute increments. So when we turn these indicators on, as you can see, all of these volume spikes are like either 45 minutes when the market opens or 45 minutes before the market closed. So that gives me a little better leverage when it comes to now looking at volume analysis and stuff like that. I was against volume analysis, but now I actually, like, after time, I actually kind of like started liking it a little more, right? And as you can see, the same thing here with the volume. AMD should probably continue next week. As you can see, volume, even on a pullback, volume just kept increasing higher. So they want to push AMD to continue. So AMD should most likely keep going. Yes, extended hours off. I do not use extended hours on no more at all because I like gaps. They're way easier to trade. Let's see. I'm trying to get some more examples real quick. So here go another example of AMD. All right, so this is why I say this is actually a trade that we did take. We took AMD calls again the following day. Another reason why is because until that low breaks, even though it's further in the week, that gap is still valid. That's actually why I did not swing any SPY puts or anything, is because we still have bull gaps to the downside. to where like unless we invalidate those, I kind of don't want to swing those, right? No, I do not use any pre-market. I haven't did that in years. Like I haven't used pre-market in years. Like as far as like pre-market levels, I haven't did that in years. It used to be a time where you could just buy pre-market highs and pre-market lows, but obviously, you know, stuff start changing and stuff don't work. So this is one other trade that we took on AMD. So this is another scenario. Because the thing a lot of people don't understand is even if the gap was never invalidated, even though we gapped up, so as you can see, we gapped up here, boom, 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 did this, and we gapped up again. And as you can see, this bull gap, we actually broke this newer bull gap, but we sold right back off into the previous one. So if the previous ones aren't invalidated, which this one never invalidated, then it's still valid, right? It didn't invalidate until later on over here, right? So it was still valid. So that's literally another time that I took AMD calls in the chat was literally boom, boom. We gapped up. We sold back off. We broke this one. I think this is that day that we lost on AMD because I was trying to play the last line of support as well. And we broke below. And then right after that, I signaled AMD again. I think that's what I can't remember exactly, but I'm pretty sure if you go back into the chat, I'm pretty sure that's that day where we lost on AMD at first. And then we ended up getting back in AMD and that thing just started running again. I think that was that day. But so that's like why I'm doing it. So here's another example. I mean, like we can, that's why I'm giving y'all homework today. I mean, you can do this all day if you want to. Like, look at that. This was never invalidated. So what happened? Price created a what right here? In the bull gap. What did it do? A double bottom in the bull gap, right? Was this bull gap ever invalidated since then? Was it ever invalidated? No, right? So it's still valid, okay? And it's the same way. So these I think they got, let me see. I think, yeah, see, now they invalidated. So now you wouldn't have them anymore, right? So there you go. Cool. All right. So that's that. And like I said, for homework tonight, just go practice them. Like literally, bro, just go practice them. So you will see these gaps on any time frame. That's a great question. I normally just use the 65-minute and then I day trade with the 5-minute. I mean, but like as far as like when I'm putting my analysis together, hold on. Also, I'm using TrendSpider. If everybody asks me what chart system I use, it's like $200 a month. You don't need it. But I like it, but you don't need it. It's like $200 a month. So they got some tools on here that I like using, but I mean, honestly, it's not really worth it. So bear gap. So I'm not gonna lie, bear gaps are a lot harder. And the reason why bear gaps are harder is because the reason why bear gaps are harder is a lot of the times when bears do something, they do it quick. So like bear gaps are literally a thing, but they're so quick. Like bears normally don't let it retest for the most part, right? Bears normally don't even let it come to the gap point. Like for example, today, this was a bear gap. And I was watching this bear gap. And this is where, you know, I got my target from. People, oh, Jay, you were wrong. You thought SPY was going to go to 455 today. You know, that was a crazy target. No, that was literally just the top of the bear gap. That's literally what it was. But okay, so it was literally right here. That was my target. This area, I literally thought we were going to get up here. Then I thought potentially we could reject from there. But as you can see, your boys had other plans. Okay, they had other plans today. They weren't going to let it. And that's why I say bear gaps are harder to trade a little bit, because for the most part, bears don't even let it get to that point. Like they just like, no, like no, hell no. Like they won't even let it get to that point. So, you know, that's something that you got to watch out for. This bear gap is still active and valid. So the only way this would be invalid is if we break above this candle's high, and that's where it would technically be invalid. So right now it is still a live bear gap, and you can just leave them on your charts. And then, you know, whenever the time comes, you know what I'm saying? You would just, you know. But yeah, like we could do this all day with bear gaps. Like here go a good example. Like I said, they're quick. Like they're so quick. and they don't pay, like they pay quick. Like they just give you your money quick and they don't last long. So like here go a great example that I was teaching my brother with bear gaps the other day. Not necessarily. So I not gap levels. I use gap levels still, but as far as like just the exact level, I don't like emphasize the level as much anymore. Because as y'all notice, damn, this thing is not want to do it. Okay. So this is what I mean by bear gaps. Okay. So you see how here we go, boom, we drop down. Okay. And then we pretty much push back up into this gap. And then once we got into this gap, we don't know when it's going to reject. We have no clue. But as it got to this gap, that's when it sold off again. But like I said, bear gaps are quick. Like you have to be in and out. Like it's not. Today was wild as hell. Like I ain't about to lie. Like you normally don't get a big. I mean, that was kind of wild. But normally they're normally quick and they get bought up pretty quickly. As you can see, like you sold off. This was a pretty significant drop though. Would have made like 1,000% for sure. And then it immediately got bought right back up and started trending back up. But like bear gaps are also alive. They're there. Here go another one. Like I said, they're really quick. Why is it doing this? Okay. Y'all see this bear gap? And we can do this all day. We can literally do this all day. Okay. Literally, we gap down, boom, came back, rejected that area. We don't know where it's going to reject in the gap. We just know it's going to reject. It's a bear gap, unless it's broken, and then it just rejected. And literally, this is literally you do this all day long. You still use structure. So on the 5-minute time, if you're in the 65-minute time frame, what do you think you're going to see on the 5-minute time frame in this area? What should you want to see? Come on, y'all. You're right. What do you want to see? You want to see the market start to do what? Wix is good. That's showing rejections. What else? A double top, bearish candles. Basically the correct question, the correct thing is you want to see bearish, just anything bearish, right? You just want to see bearish context. I call it bearish context. You want to see double tops. You want to see head and shoulders, anything, and then that will position you for your trade, right? And it's the same thing, and nothing that I'm doing is different from what I taught you, right? It's literally, I might tweak some things, and when I do tweak some things, I make sure that you guys are aware and because the market is constantly changing. So I'm not necessarily doing anything differently. I'm just changing some things and being a little more strict based off of what I see, right? Do you use fibs? No, if I do use a fib, it's only to get the 50% retracement. And all that other stuff, I don't really care about. I normally, if I do use it, I try to catch like a 50, like, whenever we have a pullback, I try to at least buy the dip at that 50% retracement. But for the most part, you don't really need that. And this is mainly catered towards day traders. My bad, swing traders. You'll have to hit up Will for that one, or one of the other admins. This is really a day trading strategy, and it works better in the mornings. It's still working evenings, but it's very extremely profitable in the mornings. Also, with some people that I've taught, they like to use this strategy with open, if y'all know the open print pullback. So basically wherever we open at, like let's say that SPY opens at 450, if we pull back below 450 and then come back above, a lot of people like to use the opening price pullback with this strategy as well. There's a lot of different ways you could trade it, but the whole purpose of me getting on Zoom is for you guys to take this little information, and it ain't nothing crazy or nothing hard, and literally just look at gaps. Like go on the gaps and look for trading opportunities all weekend. I literally don't want you guys to do anything else this weekend. No clubs, no nothing. Go study this up, because I promise you it's going to help you so much next week. Also, a lot of people ask me, they be like, hey Jay, how do this strategy, like this strategy helps you a lot with let me not say strategy, just this way of trading helps you a lot with not getting caught in chop. Because for the most part, if there's no gaps or prices kind of staying the same, that most likely indicates that the stock has not moved and it's not going anywhere. That's literally so that's like number one. Like it's like don't even trade it because if the stock is like around or the gap is super small or something, like it kind of give you indication not to trade nothing. You know what I mean? So, how much more time we got? Because it is one more thing I want to show you, and I'm on the wrong zone. Guys, how much time do I got on this Zoom? Do it show y'all? Okay, I guess we'll just wait for the thing to pop up. All right, so it should be unlimited, but I'm on my other Zoom. I'm on my other Zoom. I don't know how I logged into it. Yeah, you can use the 60. They're all gonna be the same gaps. I mean, they're literally gonna be the same as that gaps on the 5 minute versus the 65 minute. It's gonna be the same gaps. I just say like whenever I'm doing my analysis, I start from the 65 minute. All right, so next, this is some notes that I want y'all to put. Number one, whenever you have a gap up or a gap down, price likes to continue in the direction of the gap. So that's why if we have a gap up day, I want to only trade calls. That's just going to that's going to make your life so much easier. I know we be having those puts that be going crazy, but I'm talking about long term as you becoming a profitable trader, a consistent trader, right? Normally you want to trade the way that we gapped. For the most part, that's going to have your most support and the most help from you is when we gap up that way. So if we gap down, then most likely you want to trade to the downside. If we gap up, most likely you want to trade to the upside, right? So normally if we gap up and we pull back, I'm normally looking for calls, right? Because we gapped up. So now that we gapped up, we obviously gapped up, meaning that the bulls were in control, right? That's how we gapped up. So normally when we pull back, the bulls are normally going to step in the same way with bears, right? Normally, if we gap down, the bears are normally going to step in. And this is like from a day-to-day basis, how I decide if I want to be bullish or bearish. And if you're a person that like have trouble, like I tell you this all the time, yes, we're trading. Yes, you want to be able to trade both sides. But in my experience of meeting traders that's been doing this for 20 plus years, honestly, if I'm being completely honest with you, and I didn't know this. I just figured this out like literally maybe like a month or two ago. The most profitable traders I ever seen in my life, they kind of one-sided. Like, and I know that might sound crazy to some new people, but like their mindset is basically, depending on the entire market. So right now we are obviously uptrending overall. So for the most part, they're just looking for call opportunities. Now, if the market pulls back, they just let it pull back. They don't really try to trade the puts. I mean, we know that the puts go crazy, but that's just my kind of take on it as I start experiencing more with just becoming a more even better trader. I just noticed like, hey, like you don't have to try to catch every tick. Like I could have definitely like, as I seen that, SPY broke that level, I could have literally took puts if I really wanted to. I ain't gonna sit here and lie. I really could. I mean, it broke my level. It was no point for me to hold no more. All right, there it is. There it is. It's like 10 minutes. All right, cool. I knew it was gonna pop up. Okay. So I literally like it's a personal preference. Like I tell people this all the time. Like you don't have to trade every tick. You don't have to catch every tick. I missed it. Yeah, they did go up 1,000%. They did. I've seen calls go 1,000%. I've seen puts go 1,000% plenty of times. But I notice it's like them. Like you're not having a bias or anything. It's just like you have your personal preference, right? You just prefer. Some people prefer puts. Some people prefer calls, right? But as a trader, like you still won't be able to trade both ways, but me as just like giving y'all like what I'm doing going forward is more like, okay, right now the long-term trend is an uptrend. Until we break that, I'm gonna be looking for caller opportunities. And that's like if we come down, every now and then, maybe 5% of the time I might, signal a put or something. But for the most part, I'm looking for, buying opportunities right now. That's because as you can see, every time, like it do be those days like today where it just dropped and it just kept dropping. But if you can see, like, if you go when you go on your charts this weekend, you're gonna see like, damn, every time we drop, the bulls just buy right back up. And that's because we're in a bull market. Versus now, if we were in a bear market, it'd be the complete opposite. So that's just my personal take on it. You can take that with a grain of salt. But don't I'm not about to tell you don't do puts now. I ain't trying to sell nobody on that. Like that was today was crazy. I gotta give it to him. I gotta give it to the Bears on that one. That was some crazy shit. I ain't never. If y'all notice, puts are so quick. Look at this. I mean, like I don't know what it is, but the Bears, they get nice ass candles. I mean, with the calls, look at how we had the hold and the pullback and the key going. The Bears just get 2 candles done. Like, and that's one thing I will say about the Bears is like they get candles quick. Like we have to like, you know what I'm saying, like deal with pullbacks and stuff like that. Like, I mean, if you go here, I mean, look at this uptrend. Like we had the push, we had all these wicks and shit. I mean, look, I mean, literally 2 candles done. I mean, literally, like it's some crazy shit. Look at this. Boom, 2 candles done. I mean, it's like I don't know what to say. Like that shit is crazy. Like, I mean, it's literally 2 candles done every time. You're gonna see that on your charts today. Look at that. Gap down, boom, 1 candle out. Look at that. Just ridiculous. Look at these candles that the Bears get. So that's what I was trying to. Hold on, guys. All right, I'm back. So yeah, I mean, it is what it is. Everybody had their own personal preferences. I mean, you know, either you'll, you know what I'm saying? Just you know, come into the market without a bias, trade your best setups right now. I've noticed that I've been way more profitable trading to the upside. So that's kind of what I'm kind of like preferring to do right now. Just because that's just, you know. Total profit for the week. I'm gonna tell you after I turn off the recording. You know, I don't really want people to know any big profits. Y'all know I only tell the chat. I don't really put it out there. So other than that, any questions on this? I mean, was it simple? Is it like, do it make sense? Oh, real quick, my bad. This is why I did not swing puts when I was telling y'all that from earlier, because can y'all see where we at? What are we in? We are currently in a what? A bull gap, right? Bull gap support. So for me to trade puts, I would need it to break below this low right here at 4465. Then, okay, I could trade puts. But then what makes it harder is we have another bull gap right below it. So it's like, do I really want to play with fire right there? So, you know, next week is going to be hard as shit to trade. I'm going to tell you that right now. Like, it's going to be hard as shit. Like, it's going to be hard because we can't technically take calls right now. We can't take calls right now because that big of a drop. We really can't take calls simply because like we at this bull gap. We made a significant drop into it. Normally, you want to see price slow down as it gets to the gaps. You don't want to see it like just gap down straight into it. So that's kind of like a red flag. But also, I don't want to do puts right away because we have a huge support right below it. So it's kind of just like tomorrow gonna be hard. So the only way for me to take calls next week is if we either come to these bull gaps and then, well, actually, hold on. Let me tell you this. First of all, the best way that I know, which is the most profitable way, is if you want to trade calls again after a move like this happened and not get chopped up, it's best to just wait for another gap up. So like, let's say that, you know, SPY decides that it wants to gap up on Monday, then that's when we can start it over again. So like, let's say that, you know, we close right here on XPX and then Monday we, you know, we move up and then we gap up. Okay. And we gap right here. Then I will be more likely to take calls then rather than trying to catch these bottoms right here. Did that make sense? So like next week, literally, you're probably not gonna see many trades from me unless I'll be honest, unless we either make another gap down and get like a more recent bear gap resistance, that's what it's called, or if we have a gap up and we have a bull gap support play. So those are the only ways that I'm really gonna be trading, because what's gonna happen next week, and I can guarantee you this, and this class is recorded, so I don't want to hear no excuses for next week. I can guarantee next week is gonna be damn near chop for at least the first 2 days of next week. I can almost guarantee that, unless And with Apple coming down, I don't see any good news can kind of save the market right now. So I can almost guarantee you it's going to be chopped. It's going to be hard as hell to trade at least the first 2 days. And that's just because we're at these levels. That don't mean that you buy immediately as soon as you get there, especially old ones. So that, let me make sure I put that in the notes before I let y'all go. Old bull gaps or bear gaps have to be treated with cautious, right? Because for the most part, it's like, for some reason, it's like, think of it as price likes to get there and then it likes to just like take a break. It's like price was just doing all of this and it was just doing all of this working out and stuff. And then now that it gets to this support or this resistance, it wants to take a break there. And it was an old support and resistance too. It's not recent. So normally what price likes to do is it likes to just pause in those areas and then it might chop a little bit and then it makes another gap, a recent gap. And those are the trading gaps. Does that make sense? Yes, no, maybe. Because I know if I teach people the gaps, all they're going to do is they're going to try to trade the old ones. They're going to like waste so much buying power. Like all I'm saying is just know that it's going to be hard. Like this is a gap. Okay. That girl following me suit. Oh, yeah, it's a bit. Um, how long would you consider? Oh, I mean, anything that's not the recent day. Like I kind of considered, like if it's not the last 1 to 2 days, I consider that pretty old. Um, no, that's pretty. These gaps down here, these are pretty old, right? These been there for a minute. So what price likes to do is they kind of like to pause there. Okay, they like to pause there, chop a little bit, and then you might see a gap up or down, right? Look at this. Like, I mean, this is literally perfect execution, right? Look, boom. We gapped up. What do we do? What do we do? We gapped up. Now, this is the time that you could swing trade, something like that. So we gapped up, we pulled right back into that bull gap support, and then we just ripped from there, right? Did that make sense? Cool, cool. Actually, guys, I want to show y'all one more thing. Let me turn this Zoom off and then get back on another one. And then I got to show y'all one more thing before I let y'all go. So join the next Zoom link.